clients may be looking at acquiring another company, and the company that they might potentially acquire, the financial reporting is just, lacking would be an understatement.
Yeah.
And what people fail to realize is they fail to get value for their company because of that. You just can't, they think they're being wise in not spending that money over the years, but it ends up costing them a heck of a lot more at the end of the day. From Rea Associates Studio, this is Unsuitable, a management and financial services podcast for entrepreneurs, tenured business leaders, and others who are ready to look beyond the suit and tie culture for meaningful, measurable results. I'm Doug Hauser. It's December now, which means as far as your company's finances are concerned, we're on crunch time. Did you get everything done that you wanted to cover over the course of 2019? On this week's show, we are joined by Brent Ardit, a principal at Rea, who will talk about the importance of year-end planning and what you can do to get your financials in order as we look ahead to 2020, which is hard to believe. Welcome, Brent.
The same thing. Hard to believe we're talking about 2020 already.
End of the decade, my friend.
No kidding.
And here we are.
I always hear when people talk about 1990, they think it's yesterday.
Right.
That was 30 years ago.
I feel like that, some days, But yeah, so we're approaching year end, and it's always good as we tell our clients, right? Be prepared, plan ahead, because lack of planning makes it all a disaster, right?
Absolutely. I think we've had a few conversations recently with some clients that we've talked to, and
so what, in your view, what can a company do as they approach year end to best plan for their CPAs to come out, whether it's, compilation, review, audit, doesn't matter. What should they be thinking about to be prepared?
Yeah, there's definitely a couple different angles you can come in at. It can be, with the audits, reviews, compilations. It could be from tax planning. But it's just taking a look and reviewing how the year has gone. Mm-hmm. I always say that if you can look at your balance sheet and you can go down through your cash, your accounts receivable, your accounts payable, whatever it may be, and you can explain what the balance is. You have some supporting schedules for that. That's going to go a long way to preparing you for year end. Because a CPA is going to come in and they're going to want to know what's in this balance, what makes up this balance. And same thing with the income statement. Understanding, looking at trends, analytics. Why did this go up? Why did this go down?
Yeah.
Why did it stay the same?
It's a great point, because I think we see a lot of folks, they just get in the weeds, so to speak, or in that whirlwind, as we say, and they're worried about the day to day, and then not focused kind of on the big picture. What's the financial statement look like as a whole, and then sort of thinking, why is this a little different than maybe I thought? Or having that support is important for that.
Yeah, and especially when you're talking an audit and someone's going to come in and ask you what this balance is and ask you for all these documents. If you're able to answer that quickly and have some support, it's going to make that process go a lot easier.
Right. Less time for us out there. And
less time for us, absolutely.
We can spend more time actually talking about the client's business, right? Not about the basic stuff that we're trying to clean up.
Yeah, as much as you can do on the front end. Once you get into the next year, you want to focus on that next year. You want to be able to focus on the future. You don't want to always be looking at the past. You want to provide that value,
right?
And forward looking, and future looking, and preparing for, what's coming up and what's going to impact your business. So the more you can focus on that and the less on some of that historical stuff that you've already prepared for, the better.
And from a tax perspective, too, I know you're not, you and I aren't tax folks, but we know enough to be dangerous, right?
Absolutely, yep.
But the important thing is have an idea as to where your year might finish and sit down with your CPA, right? Say, so what should we be doing?
Yep, tax planning for sure. I mean, obviously, can't do much after, December 31st, but if you're getting out ahead of it, even if it is, 2 or 3 weeks before year end, there might be some things that you can do,
sure,
as opposed to a couple days after.
I mean, I think about our clients, say, in the construction space with planning for capital equipment purchases or, whatever the case might be. So it's a good time to sit down and have those conversations.
Yeah, and there's opportunity there if you can see where you're going to end up at year end, some tax planning. There's those opportunities. Do we have the opportunity to purchase some equipment, or it could be retirement planning or bonuses or, whatever it may be.
Great point.
If you can think about those things ahead of time, it'll go a long way.
It actually ends up saving you time and effort and makes things more efficient with us too, that's for sure. So what are some of the main pitfalls that you see and failings that you've seen with clients that haven't, just maybe don't have their house in order? What does that process look like from sort of a worst case scenario perspective?
Probably the biggest thing is the reconciliations. Starts with cash.
Mm-hmm.
If you haven't been doing regular bank reconciliations, that can be a problem.
Okay.
If you're not looking at accounts receivable aging, reconciling that detail, accounts payable. Again, those major balance sheet items could be inventory.
Okay.
Have you done a year-end inventory count? When you haven't done these reconciliations, and then it comes time for the CPA to come in, and again, whether it's on, for an audit, a review, for tax purposes, it just puts unwanted stress on everybody. There's deadlines. Obviously there's IRS deadlines, but
right.
There can be bank deadlines or
Sure.
bonding or, whatever it may be. If you don't have these things done, it just puts a lot of stress on both parties, really.
And it's amazing that you say that about cash not being reconciled. I remember walking into a few engagements where maybe they hadn't reconciled cash in several years. It was a brand new engagement, say, for our firm. And I mean, you just think about the risk that you're putting your business in that sense. I mean, it's unbelievable.
Yeah, you wonder how someone runs a business without, reconciling balance sheet items
right.
on a regular basis. I mean, that may work for a while, maybe for a small business, and you're
Sure.
saying, no, I have cash in the bank. Well, that can probably work for a little bit, but as, a business continues to grow, I think what we've seen is that eventually catches up with you. A lot of these things that we're talking about right now aren't necessarily things that you should wait until right here at year end.
Right.
But for sure, if you are at this point and you're thinking back and you're like, man, I haven't done that, or I haven't done that.
Right.
These are some key things you'll want to really start focusing on is some reconciliations and understanding what is making up these balances and being able to answer those questions.
What about the income statement this year? We've got this new revenue recognition standard, which we're obviously talking to clients about. What should they be focused on the income statement? Is it really just kind of the revenue side of things, or expense details, all the above?
I think it's all the above, and that's a very good point. If you are reporting in accordance with GAAP or
Mm-hmm.
generally accepted accounting principles, there's a new revenue recognition standard.
Yeah.
And that affects all industries. It doesn't matter if you're construction, manufacturing, retail, whatever it is, that standard is going to affect you in some way. Could have a major impact, could have a minimal impact, but you want to get ahead of that.
Yeah.
It goes into effect for reporting periods. 12/31, 2019 will be that first reporting period.
Yeah.
And you want to get ahead of that. So reaching out to your CPA, understanding, looking at if you have contracts.
Yeah, it's a good point. It's just, again, having those conversations to make sure you've addressed what issues are there so that you're adhering to the proper guidelines and all that. Some of what we've seen, the impact with that RevRec has been, not too bad, but in some cases people aren't prepared either. And then we end up having to spend way more time than probably we'd like or the client would like going through that stuff, which nobody likes, right?
Right.
Not fun.
Nope.
So if I think about some of the best practices from folks, obviously being prepared, having those reconciliations done, what else should I be thinking about in terms of the dialogue with my accountant? Assume I'm all my stuff's balanced and tied out and clean. So what do I want to focus on?
I would focus on, are there any major transactions that occurred in the year? Especially, if you have an audit or review, I mean, those are the types of things you want to focus on. If there's new disclosures, surrounding that, there's a potential impact, as it relates to covenants or you just want to focus on, are there any major transactions that occurred? if there's anything in the future coming up, you want to reach out to your banker,
Right.
maybe it's your attorney,
Yeah.
Get legal involved. You want to do as much as you can.
And it's you bring up a good point, say about the covenants or the banker, for example, because of the different reporting guidelines that are in place this year with RevRec, and we've got leases upcoming, how that can impact the presentation of the financial statements that we provide, right?
Yep.
And may certainly impact what the bank sees or the bonding company or whoever. So let's get together and have those conversations, right?
Absolutely. Get all parties so everyone's on the same page. It's not a surprise at deadline time when drafts are going out or that final is going, that final report is going out, and all of a sudden a banker sees it and what is
Freaks
this?
out, right?
Freaks out. What is this?
Yeah.
And that could have impact on the future. So.
And you and I have been involved in a number of clients that have gone through transitions this year, either inside sales to other inside parties or an ESOP or outside sales. Talk about the impact of lack of, say, financial accounting standards has on going through that process.
That can absolutely come back to haunt you. As people are doing their due diligence and coming in and taking a look at your business, like you said, from a sale perspective, from potential ESOP, obviously that's one of the big things that people are going to be looking at is your financial reporting and how accurate it is. Is it reliable information?
Sure.
And if people are asking you questions and asking you for this and asking you for that, and you're not able to provide it, or haven't reconciled this in a year, 2 years, I think that looks poorly from a buyer perspective, or whoever it may be, reflects poorly on the business itself.
I think what we've seen, you and I, we've got one now that clients may be looking at acquiring another company, and the company that they might potentially acquire, the financial reporting is just, it's lacking would be an understatement.
Yeah.
And what people fail to realize is they fail to get value for their company because of that. You just can't, they think they're being wise in not spending that money over the years, but it ends up costing them a heck of a lot more at the end of the day, right?
Yeah, you get what you pay for.
There you go, right? That's the ultimate lesson. But yeah, it's frightening what we see with some of that stuff. So
there's many. We could probably sit here for the next hour and talk about stories and what happens and the stress that ends up on everybody at deadline time if you're not prepared, trying to get the report out at the last minute. Of course, no one likes to have their fees increased, so you want to be somewhat fee conscious, but not being prepared is a very easy way to see those fees increase as well.
I think that's a great point, and just having those conversations ahead of time, you think, well, gosh, I'm going to spend this extra time. Is that going to cost me? No, it actually ends up saving you, right?
Right.
But people don't always think of it that way.
No, they don't.
Well, that's great. What else do you see coming ahead in 20 as we get into 2020? We get into our financial reporting busy season, as you say, right? Because we've got to get this stuff done for the banks and et cetera. What's ahead that folks should be aware of, if anything?
I think we've talked about it. I think it's, especially when it comes to the revenue recognition standard, I think regardless of the impact, big or small, I think there's going to be some disclosure type items that need to be addressed.
Yeah.
I'm sure there's plenty of things on the tax side. I mean, we mentioned we know enough to be dangerous on the tax side here. Tax is always changing.
Yeah, always some planning that you can do there.
Yeah, just revenue recognition, those new standards. Luckily leases were pushed back a little bit. We have a little bit of time here. Yep.
I know from a revenue recognition perspective, particularly with regard to contractors, some of the balance sheet disclosures will look a little bit different, grouped a little bit differently, perhaps. That can have an impact for third-party readers, too. Again, it's not that this changes the way somebody should run their business, but be aware of how it impacts those that you're answering to. I think
absolutely. Yep.
This is great stuff, so I appreciate that. But now that we're unfortunately at the end of golf season, you got any new equipment plans for the upcoming year, or you gonna stand pat for now?
It's funny you say that. I have a appointment to do a fitting for golf clubs.
Nice.
So I'm using this, kind of approaching the off season to to potentially look at a new set of clubs.
Good. So you're planning on for the new season of golf, as it were, same as you would do it professionally.
Yeah, absolutely.
Good.
Got to get ready for next year.
I love it. Yeah. So irons or new metal or what? What do you
Probably
at?
irons.
Irons?
Yeah, it's been a few years since I've got a new set of irons, so you get the edge. It's probably like anything, if you're a musician, you want that new guitar or whatever it may be.
Yeah. Got to watch it. That's going to mean less strokes, though, for you.
Yeah. No, I played with you. I'm the one that gets all the strokes.
I don't know about that. But anyway, thanks for being on, Brent. It's been great insight. If you want more business tips and insight or to hear previous episodes of Unsuitable, visit our podcast page at www.reacpa.com/podcast. Thanks for listening to this week's show. You can subscribe to Unsuitable on iTunes or wherever you like to get your podcasts, including YouTube. And while you're there, leave us a review. I'm Doug Hauser. Join us next week for another Unsuitable interview from an industry professional.